Sorry about the abrupt cutoff of the last video. My video software updated and it cuts off at 15 minutes, which I appreciate because it keeps me to shorter videos, but it no longer gives me a timer at the bottom like it did before the update, so I can see where I am with time and decide that it's time to stop. So that's just a frustration with that software update that I can't see how many minutes I've been recording and plan accordingly. So back to our discussion about adjusting entry for the inventory of supplies. Okay, so we have under the purchases method, we're looking at, this is similar to a periodic inventory system and consistent with the modified accrual basis accounting. And with the purchases method, we have expenditures and inventory supplies must be adjusted at year end with a journal entry. So we have an entry to record the difference between supplies in our accounting records and supplies that we have on hand after a physical inventory account. So the consumption method is where our expenses and expenditures reflect the amount consumed. Okay, so this is similar to a perpetual inventory system. And we don't need to do an adjusting entries then because we record supplies as we consume them. Okay. Of course, we're going to have an example when we get to examples where we look at both sides of this, and your textbook covers the examples in the chapter 4 reading also. At the end of the accounting period, we're going to create a pre-closing trial balance listing all of our accounts, very similar to a business entity where we look at our stuff and then we need to close temporary accounts. Again, this is very similar to a business accounting and the accounting that you've learned about. We close all temporary accounts, both budgetary and operating, to the appropriate fund balance accounts. Budgetary accounts are closed by just reversing the original budgetary entry unless they've been adjusted for or amended throughout the year, and then we use the amended amounts. Closing the operating accounts, of course, increases or decreases the balance of the general ledger fund balance unassigned account by the difference between revenues and other financial sources. So you saw that in chapter 3 when we were creating the financial statements, that we have what are the revenues that we receive, what are the liabilities, and then if we have a surplus, that increases the fund balance, and we have a deficit, we have more expenditures than revenues, then that decreases the unassigned fund balance. Reclassification of fund balance accounts. So this is when we have revenue resources that have constraints placed on them. Constraints that happen because of laws that say that they can only be spent in any way, constraints on because they've been donated funds. And so we have to look at how do we have to establish a policy of spending constrained resources, okay, before we can spend unconstrained resources for these purposes. So what this says is, if I have an account where I have received a grant from the federal government that says this grant is to be used to turn flood areas into parkland. So I received $1 million from the federal government to turn flood areas in my city into parkland so that I don't have flooded homes in that area. I'm using this example because I worked on a project where we did this as part of the city of Iowa City, where after the 2008 floods, the city received a very large FEMA grant to buy houses in flood zones and turn those areas into parkland, so we didn't have people living in flood zones. So that's where I got that example. But anyway, we have $1 million in this grant. So what that says is we have to spend that $1 million from that grant before we can spend general city resources on that same project. So that's where our constrained resources have to be spent before any unassigned balances can be spent. And then our general fund financial statements. The general fund is a major fund and gets represented in a separate column. And then other major funds also get represented in separate columns. Separate financial statements can be prepared for the general fund, where we would do all statements showing only the general fund and then do other statements for other funds separately. Or what is most common is that we show our funds in different columns. So we have a large financial statement, and then we have the general fund in the first column, and then various funds included, business type activities, and etc. Of course, we're going to build on these financial statements as we cover these different types of funds throughout the semester. The budgetary statement are schedules, so where we compare the budget for actual for both our general fund and all major special revenue funds. We have to show our legally adopted budget, if we amended the budget in any way, and then what the budget to actual was. So this is required as part of our governmental reporting. So this is an end of year where we show budget to actual and then the variances between the two. And special revenue funds. Special revenue funds are needed when a significant revenue source is restricted. So in the different examples that we see here, we have special revenue funds for a street fund, a library fund, a trust fund. We're going to have an example in the examples video where we look at a fund that has been created for care of a statue. So we have a donation that was made to maintain and clean a statue. So we can have special revenue funds for all kinds of different purposes. The main thing is that that's when that revenue source is restricted to only be spent on those things. This is, of course, something that is unique to governments and nonprofits, where they have funds that can only be used for special purposes. Businesses sometimes do receive grants, but it's not as common as governments and nonprofits receiving grants. We're going to look at some special revenue fund accounting in the examples. Okay. And then accounting for operating grants. So these are grants from other governments that are restricted for specific operating purposes. We can have all kinds of different operating grants and different operating purposes. We can receive grants for road maintenance, or grants to beautify Main Street. As I said, the state of Iowa had a program for a while where they were sending grants to smaller towns within Iowa. You could apply for a grant for your Main Street beautification. You could for street improvements, sidewalk improvements, light improvements, business improvements, building improvements, all those kinds of things. There are other kinds of grants that can be applied for different things. For example, when I worked for the city of Iowa City in the Public Works Department, one of the things that we applied for was a special grant for building a new animal shelter. So the city ran and maintained an animal rescue service and an animal control service, and this included the operation of an animal shelter. And so they applied for a grant to do some major construction to their animal shelter, and then the construction of that and was all paid for by this grant. Okay. And then, of course, we've talked about special revenue fund accounting and financial reporting. This is for the general fund versus the different funds. So any amounts for major special revenue funds would be included in our balance sheet and our statement of revenues, expenditures, and changes in fund balance. We would also have a budgetary comparison statement for each major special revenue fund, so that budget to actual, showing what amount that we had. Okay. Then we have inter-fund activity. So inter-fund activity can happen in a different kinds of ways. So one would be an inter-fund loan. So one government fund needs some cash at the moment, and another government fund has that funding available. So we do a transaction to loan that amount, and that amount is expected to be repaid. Okay. Interfund transfers are non-reciprocal transactions, so we don't expect that money to be paid. It could be something that happens on a recurrent basis, or it can be a one-time thing. So this is when you don't have to pay back. Okay. And examples of interfund transfers would be when like unassigned fund balances with the general fund. So we have excess cash in the general government fund, and we can use that to help other funds pay for their expenses if they don't generate enough revenues. And then we have intra and interactivity transactions at the government-wide level. Okay, so these would be transactions between two different government funds or two enterprise funds. Okay, or the interactivity, which includes business type funds. And we're going to really look at those type of transactions in different chapters. So this is more informational about the different kinds of operating activities that government can have. Okay, trusts. So this is where we receive contributions under agreements in which the principal amount is not expendable, but the earnings are expendable. This is a type of restricted special revenue fund. The trusts are established for different government programs or functions. So like we establish it for to buy books for the library, or we establish one to make sure there are always park benches in the park. You can actually, especially as a donor, if you decide to donate money, you can set up that money happens for any purpose. So you could, for one thing, you could set up a trust fund that says you say you really like dogs and you always want dog parks to be fully stocked with water, treats, and poop bags. So you could donate $1 million to the city government and say this money can only be used to buy poop bags for the dog park.